going to move on to another conversation here with BDS Analytics, covering the importance of data. There's a lot of important parts of cannabis. Please welcome to the stage, we have Micah Tapman, CEO of BDSA, moderated by Adam Carlson, Managing Director and Head of Life Sciences at ATB Capital Markets. Give them a warm round of applause.
Hi, everyone. My name is Adam Carlson. I'm the Head of Life Sciences at ATB Financial. For those of you that don't know us, we're a commercial investment bank. Selfless promotion to begin. But with me today, I've got Micah Tapman. Micah, how are you?
I'm doing well, thank you.
Great. So we're going to be talking about the importance of data today. And with me, with Micah, BDSA, clearly a leader in the space. And the one thing, if you take away today, is BDSA is a leader in the analytics side of things. So what I'm going to do is I'm going to pass it over to Micah to begin and maybe give us a bit of a rundown about your business and the different segments.
Yeah, thank you very much, Adam. First of all, thank you everybody for making it out here. Fun to see everybody after all the COVID lockdowns. So great to see those smiling faces out there. BDSA was founded back in 2015. And actually my business partner, Patrick Ray, and I at the time were leading Canopy Boulder. And we were trying to figure out how to make investments. And we couldn't figure out the data side of the business. There was no real data for the cannabis business. Back then, for example, people were estimating that the edibles share of the market was something like 50%. And we were uncertain about that. We just didn't know. And we started poking around and trying to figure it out and realized there wasn't a solution. And what we actually looked at was how could we invest in a data and market research business to actually fuel our own investing strategies, which is where BDSA was born. So Roy and Liz came in as the founders of BDSA. We put in that early money to get them going. And since then, BDSA has really just been on a rocket ship journey. What's fun about BDSA, I'm a data nerd. I come back to this from cybersecurity. And so for me, this is about busting myths. This is about debunking people's false ideas about what's going on in the industry. Really learning what is the actual selling price of a product, really learning why are people purchasing the products that they're purchasing, how often are they shopping, how many consumers are there in the market, all of those fundamental questions. Because at the end of the day, BDSA is about removing uncertainty. And that is our main mission as a company, is remove uncertainty from the decision-making process. And we do that by collecting raw data, processing that raw data, and turning it into actionable insights for our consumers.
Great. So today we're going to run through three different topics while we have Micah here with us. The first is going to be recent data. Obviously, we know that the cannabis space has gone through a transition period. Q4 was quite difficult for a lot of the operators there. Various states were troubling. First, it's going to be a look back for us, what happened in Q4 and over 2021. The next topic we're going to address is what to look for in 2022, whether that's new states coming online, product forms, and what have you. And then the third, as Micah alluded to, just going to go through with the last couple minutes and do some myth busting. So, as I said, Micah, 2022 estimates for the majority of the top MSOs were downgraded by, on average, let's call it 20 to 25% by the street with the last reporting. Obviously, as I alluded to, wholesale in Massachusetts or Illinois become major headwinds. Are we through it holistically and we can move on, or is 2022 going to be a difficult year for us?
Well, looking at the future is always a bit hard. As we look at the data, Q3, Q4, and even parts of Q1 were very, very tough in a number of markets. There are two different ways that we generally will look at the data, units sold and dollars sold. It's very important to look at them in both directions because, of course, if prices are declining, you'll see a decline in dollars sold, but units might actually be trending up. That was the case, for example, in Massachusetts, where units actually went up and dollars went down. So that was a very interesting dynamic to look at versus a California where you saw both dollars and units declining sequentially. Now, when we're looking at those dynamics, there are a number of different factors to take into account. First of all is availability of the product. The more availability a product has, typically the lower the price will be for that particular product. If it's a true commodity, for example, it's just moving to the lowest price that somebody can supply it at. And that's where differentiation across form factors has become really important. We saw, for example, even with the decline, an increase in the category share for both vapes and pre-rolls, both of which are a manufactured item, right? So there is limited availability to some degree for both vapes and pre-rolls, and there's been differentiation in those particular categories. They also satisfy consumer demand for different need states, which is very, very important for the manufacturers to be thinking about. Because we would use topicals, let's say, as a cannabis consumer, you use topicals differently than you use pre-rolls, differently than you would use edibles. And so really appealing in those different directions is very important to be able to sort of combat those headwinds. But to come back to that original question, when we look at a market, you will see over the years an evolution of that market, depending on the regulatory structure, with availability driving down pricing, because as more product becomes available on the market, the prices will decline. So every time a market opens, we can expect that to be sort of the high water mark for the pricing on the wholesale side of things. And then as availability ramps up, those prices will decline. That is fastest in the biomass, meaning raw flower. It is slowest in the manufactured goods. Anything that requires a manufacturing facility will typically withstand that price deflation a little bit better than the biomass.
So touching on your point on product form factors, let's just take more mature markets. Which are the ones in 21 did you see escalate the most? Where did that come into the expense of? And how will that transition for 22, you figure?
Infused pre-rolls. They were up a solid 25 to 50%, depending on the market that we looked at. And infused pre-roll is an interesting category. We think about that, and most of us probably, we started experimenting with cannabis when we were in high school or whatnot, and we probably didn't have infused pre-rolls. And then if you think about the manufacturing process, there is an extra step for an infused pre-roll. So it makes sense that it takes a little bit of time for the brands and the manufacturers to actually ramp up production and figure out how to make it. An example of how this actually plays out, when Colorado first had sales back in 2014, there's a very interesting dynamic where many of the pre-roll manufacturers were rolling the pre-rolls too tightly and they did not burn correctly. And you can imagine how frustrating that is as a consumer. You've got your pre-roll, but it won't stay lit. But of course, the funny part here is that the tobacco companies have been rolling cigarettes for decades, and they had all the tools in place to actually do a much better job. That needed to be brought into the cannabis industry, and people had to figure out how do we think about that. The same goes for everything that's happening now with infused pre-rolls, with beverages, which is another category that saw about a 50% increase in performance in 21.
Interesting. Okay, so just moving on for 2022, more so here. New states continue to open. I believe it's today that New Jersey, I believe, opens today. I know a number of MSOs are traveling there right after this. What are the next ones that you look most forward to?
Well, the tri-state area, Connecticut, New York, New Jersey is the big one for sure. It is a huge contributor to the growth over the next 5 years. When we look at the market dynamics through 2026, 2027, New York and New Jersey are right at the top of that list. Connecticut will trail along with them as well. But the other interesting part about that is that the move of New York and New Jersey is very likely to force the hand of states like Pennsylvania to shift from a medical regime over to a recreational program. You've got the big states on the outliers, right? Texas and Florida being very interesting to look at there. No movement in the foreseeable future from Texas, although Texas, well, it's a little wild, so you never know what's going to happen. Florida is another one, though. It really will be a massive market when it opens up fully. It's already $1 billion market, and when they go recreational here, it'll change the game for sure.
So just on your point, I'll push you on the tri-state area. Do you feel like New Jersey will expedite New York and the other bordering states?
Yeah, and we definitely see that, right? Each state, as they legalize, they recoup tax dollars, right? So New Jersey will bring in the tax dollars. What will happen is the New Yorkers are going to cross the border, and those New Yorkers are going to be spending money in New Jersey. The tax dollars will flow up to Jersey. New Yorkers get pissed off about that, and we'll put pressure on the politicians to say, hey, open this up for us. And that's what they're doing right now because, for example, the New York-Massachusetts border, if you look at the performance of a retailer on that border, they definitely see the cross traffic out of New York into Massachusetts to go ahead and make those purchases. The same thing holds true in the Midwest, which is really interesting to look at because many of us think of the Midwest as being a bit conservative, but Michigan is now the third largest state market in the country. It's California, Colorado, Michigan. And Michigan is forcing the hand of other states, whether that be Ohio, despite their rivalry with Ohio on the football side. Ohio is likely to follow Michigan in that way. And you've got states like Indiana sitting in the middle in this highly conservative mode, but you do wonder how long are they going to withstand the tax revenue argument before they just concede it and say, yep, we're going to open up sales.
Yeah, and I guess if we think it through, it works both ways. For the incumbent state where the border town dispensaries are thriving, that's going to be a big risk for certain specific assets within the space right now.
Yeah, that's exactly right. And, we saw that in my home state of Colorado, where Kansas actually sued Colorado for the border town traffic. But we're going to see that decline, right? And we do see that decline as states legalize. New Mexico just legalized, Arizona legalized, those are border states for Colorado. That decreases the traffic into the border towns in Colorado because you don't have the tourism, if you will, to cross the border. So there is that normalization of trade. And just like any normal economics book will tell you, right, it's just about supply demand across the board. And we're going to see this normalization. Now, there is a huge issue that most investors are very, very curious about, which is essentially the question boils down to when is the product that's grown in Oregon and California going to be free to be exported across the country? They are the low-cost outdoor producers, and if they could bring that product into Illinois, it would drop the price in Illinois a lot. If they could bring it into Massachusetts, it would drop it, by 90%. We do not anticipate any falling of those state boundaries, even with federal legalization. So we would expect Illinois to protect its borders, even if the federal government legalizes cannabis in the next year or two, which we're hopeful for. But we still expect those jurisdictional boundaries to hold.
I'd be remiss if we didn't spend 30 seconds on California. Again, I feel like perpetually we've been a bit early. Maybe we're turning the corner now. What's the data showing us?
California is huge. It's $4 or $5 billion market. The market is booming. It continues to grow. It will be the largest contributor of growth in the U.S. for the next 5 years. So it's funny. Everybody wants to sort of dismiss California and pretend like it's too complex, it's too hard to work in, et cetera. And by the way, I have sympathy for all of that because I've done business in California and I know how hard it is. But it is important to recognize that the growth of California over the next 5 years is larger than pretty much every other state's total market size will be. So California still has a lot of potential for growth. The complexity of doing business in California cannot be overstated. It is incredibly frustrating to do business there. Everything from cultivation all the way through to retail requires a degree of sophistication and local knowledge that is very, very challenging to work in. When we look at the data, we have seen prices decline significantly. We've also seen declines in unit volume moving through. That is something that we did not expect to see. So in other words, a retailer moving 100 units a year ago might this year have seen 95 units moving through, right? That decline was very interesting. We're not sure why that happened. It could have been because of the inflation that was going on in the rest of the economy and the end of the government subsidies. It could have been some of this exodus from California that we've heard about with people leaving the Bay Area and other places for, better locales for cost of living and whatnot. So we're watching cautiously to see what's going on there, but we still anticipate massive growth in California. Call it another, 40 to 50% growth within the next 4 to 5 years for California.
And the last question I'll ask on different markets before we go into some fun myth busting to end the session here. International, again, similar to California, it seems like we've been perpetually early with it, waiting for revenues to come to fruition. Obviously, we know that Israel and Germany have changed that landscape. Same with Colombia, there's been some changes. Comments on the international landscape?
Yeah, international boils down to two markets right now, Mexico and Germany, both of which look to be moving forward. Germany, we expect to be coming online in the next couple of years. We think that's going to open somewhere in the $1.5 billion range, making it a very significant market overall. Mexico, a bit smaller, but growing pretty quickly. Call it $600 to $1 billion range there. The big question mark is really the pace of legalization and the pace of rollout. To give you an example of like how this can happen, Arizona was about 120 days from legalization of recreational market to having their first recreational sales. You look at other markets, they might have been 2.5 years from the time recreational was passed until they actually had sales. So when we look at a Germany, for example, you go, okay, well, how soon are the dispensaries or the retailers really going to have product on the shelf? What is really going to happen there? For us, that's a bit of an unknown, but we are anticipating, like I said, about $1.5 billion market for Germany, growing to about a $3 billion market pretty quickly. Mexico, sort of similar in terms of a growth pattern, but about half that size of what we're expecting from Germany. And those are very, it's just hard to predict the future with those international markets. Then obviously what's going on in Europe right now and the tragedy in Ukraine impacts Germany as well. It could go either way, though. They might say it as a tax revenue thing and say, hey, we're going to shore up some finances with cannabis, or they may say like it is not a priority right now and it gets moved to the borders.
So with the last couple minutes here, we'll just move into a bit more of a fun session with some myth busting. So we all come into this space with different preconceptions. Which are those misconceptions?
Yeah, I think it's interesting, right? We've all heard the lazy stoner, sort of stuff. But you look at the data, and we've been doing the consumer research for 4 years now. So we do a 20,000 person consumer research study twice a year. Looking at that, you have a very highly educated consumer base for cannabis, right? More than 50% of cannabis consumers have a college education. When we look at the usage occasions, it's also very fascinating there. I mentioned earlier that we use different product form factors at different points in our day and different points of the week. So, for example, if I wake up on Tuesday morning and my back is hurting, I'm going to use a topical for the pain relief that the topical brings to the table. When I'm out and about, I might pop an edible because it's very discreet and very easy to consume. And each of those has a different reason, whether it's pain suppression, anxiety management, sleep, which, by the way, those three are the top reasons that people use cannabis. But we can't forget recreation. The recreational side of cannabis is huge. It is a massive, massive reason that people use cannabis, particularly when we're talking about the growth of cannabis. It's really interesting. Baby boomers are often thought of as like pain management people. They're like, oh, that's the consumer that's going to do back pain and whatnot. No, they're getting stoned, right? They're looking to have a good time. They're looking to relax, right? One of those common myths. Another one that I want to highlight is gender equality. It is absolutely the case that women like cannabis, and they make up about half of the cannabis consumer population. As the product becomes more available, they are more likely to be a cannabis consumer, right up to that, being on par with the census data, right? They represent about 50+% of the population, and they can easily represent that for cannabis over time. There is a stigma associated with cannabis, and women typically will be a little bit lesser representative in earlier markets. So if a market legalizes that first year, you might see women at like 35 or 40% of the consumer population, but that'll quickly rise to that 50% threshold.
Right. We have 1 minute left, so I just wanted to hand it back over to you. Obviously, BDSA, service provider in the space, focusing on the analytics side and insights. Anything else you'd like to say before we wrap it up?
Well, what I really want to point out is come back to my original point. If you have uncertainty about the data, if you're not sure of the answer to a question, BDSA is a very good resource for that. Our job is not to make your business decision for you. Our job is to actually give you the factual data so that you can understand those data points and those insights going into your decision-making process. right? That idea about, hey, do I launch a form factor in this particular category? Let's say topicals. We can tell you what is the average price point for a topical, right? What are the reasons people actually buy topicals? How would I think about building a brand? So you can stop guessing. You can stop having the arguments around the boardroom table about, hey, well, my grandmother says this, my sister says that, my brother says this, I do that, right? And actually say, well, no, according to the data, here are the actual answers.
Great. Thank you very much.
All right. Thanks, everybody.
Thank you so much, Adam Carlson, Micah Tapman. Much appreciated, gentlemen.